the when is 44.04 and the high is 43.89. The difference between the two numbers is 15 points. That is a large difference. That is what we have. A bid is so aggressive. The bid in the auction itself was so aggressive that the yield accepted was lower than prior to the auction beginning in the first place, which means that the auction has a stop through of a very large 15 points. That suggests a very strong demand, and it also suggests a buy-side bond trade. Well, if we obviously look at that and we say, well, that's all very good, but what happened next on a buy-side trade? What happened next? Well, we can obviously see what happened next. We had a tail of, 4 points on the 10. So we had a tail of 4 points on the 10, and we had a stop through of 15 on the bond. So what happened next? This is what happened next, guys. This is exactly what happened next. One second. So that's exactly what happened next. So when you look at the bond, there's the auction kicking in here. There's the very, very bullish auction kicking in. See that big old green candle? And you're looking at that saying, look, there's 15 points of stop through here, guys. That is a very strong demand auction. Let's get busy with this, right? Let's get really busy with this. And obviously the upshot from that getting busy was by the time we ripped into the top edge, you were $1,000 per contract higher on the Ultra Bond. Now, you didn't have to trade the Ultra Bond. Could have traded the 10s. Could have been a contender on the 10s. Could have been a trader on the 30s. You could have traded any of those auctions if you wanted. You don't have to trade the auction contract that you're trading. In other words, in the 10-year, you don't have to trade the 10-year, but you could easily trade the ZB if you wanted to trade the ZB on those trades. That's not a problem. If you look at the 10-year, you'll see the same thing. Look, there's the 10-year right there. So when you look at the 10-year, there's the auction coming in just there. There's the story, 1810, 1815. You can see the price actually traded down at the auction. See it? So there's the 1800 candle. You actually got a discount. You don't think that happens, do you, Reeve? When you're a bond trader, but it does happen. So we got a very good demand auction on the 30. Very good demand auction on the 30. And the 10-year dropped. The 10-year dropped. So obviously that must be market manipulation. So when you see the 10-year dropping, this was my biggest play of the day. This was my biggest play of the month, to be honest. Getting long 10-year into that discount price, because there's the auction level right there. There it is. There's your auction level. You actually got a lower price on the 10-year. You couldn't make it up, could you? So when we look at that as a storyline, it becomes very, very difficult to pass up on the opportunities that you see on these types of trades. It's a very, very, very powerful piece of information that you can take live onto your screens. When you look at the previous auction and you knew that the previous auction was a small supply auction at 1800 hours, and then you look at the 10-year contract again and you say, well, we've got a small supply auction at 1800 hours, which is this price here. Again, you get a premium to sell into right there. And you say to yourself, well, I know it's not a great supply auction, but it is still a supply auction. And there was your opportunity to start working into some of these ideas, some of these order areas, right? So you're looking at that, and then going forward, of course, we then had the CPI prints in the 10 here. We started to run that liquidity, and that's what gave us that brilliant sell order in the afternoon session, where you got that sell into that price level that we talked about. We also got the retest following the CPI print, if you remember, on the 10s. There it is there. And that become like perfect. I mean, the one thing that you can then do, interestingly enough, as a swing trader or as a retail trader, as a lifestyle trader, which is different from like a professional trader, but if you trade for a lifestyle concept, is to trade those 2 days every month. Trade the 10-year, the CPI, and the ZB 30-year. Trade those auctions and the CPI prints, And that's it. That's your month. Every single month. Those are the 2 days you trade. Those are the 2 days you work. And if you get good at it, you can earn more on those 2 days than the vast majority of people earn in a year if you get good at it. If you can trade just those 2 days, and it means that you can have the rest of the month off. You've got 28 days of the month that you can do whatever you want to do, but you're always going to be ready to trade those auctions. And obviously, if you're trading the 10-year, it's not like you're ever going to have trouble with scaling. I mean, if you're looking at the 10-year here, when you think about it, you might say, but it's not the biggest profit. We went from 29 to 0.9. You're looking at maybe 13 points. It's not a lot of money. Yeah, but I could probably trade in total. I could probably realistically trade about 5,000 contracts there without having any trouble over the course of this area, right? 5,000 contracts. So it's not like if you're going to trade a one lot that you're going to have trouble getting filled. It's not like if you're going to trade a 10 lot, you're going to have trouble getting filled. You're going to get filled on those contracts. And obviously, if you made the same money on the way down from that trade, which obviously is around about maybe, let's say for argument's sake, $350 down, $350 up, that's $700 you made per contract. If you're trading 10 lots, if this is your only trade, if you're trading 10 lots, you just made $7,000 this month from your 2 days trading. $7,000, and that's you. You're finished for the month, and you move on to the next month, and you take the rest of the month off, and you get ready for the next auction, and you become a specialist in the auction process. And if you become a specialist in the auction process, you can start watching the 10 ultras. You can start watching for those auctions. You can start watching for the 20-year auction as well, and you start looking at those other auctions as possible additional days where you might be able to play some of this type of narrative if you get a good size bid offer narrative, if you get a good size auction stop through or tail. It's a lovely way to make a living as a retail trader, as a part-time trader, if you like, but with a specialism. And that specialism is the auction process in the bond world. It's an amazing way to be able to become a specialist in something as very specific as that process. And then you learn everything there is about auctions. You become that specialist. And think about the amount of focus that's required. It's a lot less than having to learn everything about everything else. You start looking at things like the linker market. You start thinking about the narratives, about the Chesney scores, about the dollar skews. And it's all focused on those 2 days where you're starting to see those auction processes kicking off beautifully. So that's what you could be doing if you want, if you like it. This is what was the outcome. It was $1,000 per contract higher on the Ultra Bond. And I said as before that if you trade these things as specialists, then $1,000 per contract, even on a 5 lots, just absolutely killed it on the Ultra. Brilliant trades. Well done anybody that was on it. Well done anybody that understood it. Well done anybody that took it.